Sugar Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Less alone. Oh, hey everybody! How hope you guys are doing?
Doing good. Looking at Nvidia, it looks. I mean, who would have thought? You know, you're thinking like, okay, this has got a expected move of whatever 11 points. It's stinking unchanged. I love it. And you know, you don't. You know, I think most people, if they're playing earnings, a lot of people might go cheap. You know, I'll do a vertical debit spread, cheap, or maybe a directional butterfly. Some people will sell strangles, but you know, it's kind of risky in Nvidia. I mean, the last 4 or 5 earnings, after earnings have been reported, it's gone down. So I think more people were leaning to the downside. I think last night, correct me if I'm wrong, it was down $6. Now it's almost unchanged. So that's quite a bit. So I thought that was good. I mean, it went. We had one guy do like a iron butterfly. He says, you know, I don't think it'll move, because what it comes down to with earnings is, do you think it'll beat the expected move? In this case, it was 11 points or not. If you don't think it's going to beat the expected move, then you might get some kind of credits or even a butterfly, something betting on a range. So he did like an iron butterfly, you know, where you sell the at the money and buy the wings. And I'm like, well, as long as you don't get more than a 6-7% move, but now, right, it's going to do well. But the only problem is because it doesn't have 0 day on all of them. Nvidia, you know, the earnings is Friday, or the expiration is Friday. So yes, it's in the. So let's say it opens unchanged, and you had like a, you know, a credit selling strategy, or you had a butterfly at the money. You're not getting all your dough today. There's still 2 days left of trading, right? In a vehicle like Nvidia, it can move. So it's. I think that's the key with these things. You're not, you know, you'll get paid some, bow will come down, but we got till Friday. You know, that's a long time for a wild flyer like Nvidia.
Yeah. Well, I listen every freaking time. There's one a semester. There's one a season, one a quarter. I learned I go, hey, I'm not gonna do. I every time I say I'm done with earning. I am so bad at trading earnings. And then Nvidia about 2 o'clock yesterday, I said, you know what, I'm going to trade earnings. And so I'll show you what I did real quick.
We're hitting it hard right out of the gate, guys.
We're hitting it.
Struggling to keep up.
Well, I was gone yesterday. I didn't feel good. Sorry for the late notice.
We had a sick day yesterday. We're back. We're making up for it, guys.
Papa took a sick day. And so this is what I did, Dan. And I never know what I'm going to do with these things, and I just do them.
That's a hybrid. It's a hybrid calendar diagonal.
But this is why I did it. I went further out on the put side.
Yeah.
And I diagonalized the put side. And here's why. I was overall long deltas in my account with the DCs I trade.
Yeah.
And so if Nvidia was going to really tank the market, I wanted to get paid for Nvidia to tank the market.
Yeah.
So I made that DC wider to account for a little bit of a hedge overall on my, which I didn't need.
Guys, there's a big hole in the spectrum here because we don't have a name for a hybrid calendar diagonal. And I don't think hybrid calendar diagonal rolls off the tongue. And another problem is it a hybrid calendar long diagonal or a hybrid calendar short diagonal? In this case, Troy, which one did you do? Were you long or short?
I call it the puberty trade because you're not the puberty trade because you're no longer a boy, but you're not yet a man.
Okay, it's an in between.
Yeah, it's no longer a double diagonal, but it's not.
That's a memorable name.
I want to get the puberty trade.
What do you think?
I want if I'm remembered for
It's
nothing
an in
else,
between.
hey, have you ever traded Troy McNeil's puberty trade, the 923 puberty trade? I would love that.
Okay.
I hate that
Troy,
word.
real quick, this is why don't you spell? I mean, the red you're selling the 150 put and the 149 put.
Nope. So what I'm doing is I'm selling tomorrow's 149 puts and 195 calls.
Oh, I gotcha.
I diagonalized it on the downside just $1. So the next week I'm buying the 150, and the calendar is the same. So it's a call calendar and a put diagonal, basically.
Yeah.
So
but you're gonna kill it with the shorts. The shorts will bleed out probably more than and this is in Nvidia, right?
Yeah. What I hope at this point is like if I can get to like 183, 184, anything over 180, I'll take at this point. I'll probably close it on.
What's vol gonna do is the question.
Well, with any of this stuff, I mean, basically what's going to happen with this, what you want to happen is this. You want it to go shoot.
Yeah.
And keep all of its vol, keep the September 5th, all of its vol. Now, what's going to happen really is it's going to be like maybe, sorry, I still have that. Maybe it's probably going to be like that. That's probably what's going to happen realistically.
Yes.
Yeah.
But you want
some of your longs are going to come down, right?
Yeah.
Troy?
It's all a question of how much the longs are going to come down.
Yep.
Because the shorts will come down, right?
Mm-hmm.
Yeah.
I mean, no
shorts are dead. The shorts are dead. There's no doubt.
Unless we have a Thursday, fellas. Listen, it's Thursday, and the Thursdays somebody can do an analysis like right now VIX is down, and Thursdays when VIX is down, if there's a Thursday move, it's a better chance when VIX is down, and VIX is down. It is down. Futures are up. To your point, though, futures are up a whopping 3 points. ES up 3 points. Flirting with we're right at an all-time high, you know.
I think overnight was like the low.
Yeah.
But then we just kind of bounced back.
Troy, VIX looks like it could open around 1423. Will you hit the bunker if we go into the 13s? Will you go to the bunker, tell Melissa you're going to the bunker and you're preparing?
Yesterday was the first day where I looked at the VIX and I thought I could add here. But then I looked at what I have already and I was like, I shouldn't add right here. That was more or less what it took. Yeah, I got enough. We're fine. So it's what it is like you have for those familiar with Lord of the Rings, like my VIX positions are basically Mordor for the market. Like if we go to Mordor, I win. But the last 2 or 3 months, Mordor is just getting farther and farther away. Like you look at,
you're going in circles.
Yeah,
Frodo, we've been here before.
Suddenly that VIX call looks like it's really having to like go. Anyway, so with that being said, guys, we've been looking at, oh boy, the utility companies here. That's exciting news.
Very exciting. Live on the show.
Yeah, live on the show. I love I live on a road, so I have acreage, as you guys know. I have a small farm, a very small farm. It's so small that people would say it's not a farm at all. And they close the road in front of my house so often for the dumbest reasons. Anyway, so what are we talking about? We've been talking about a double diagonal. We've been talking about how to make a double diagonal good, right? And here's the thing I've noticed. I'm going to say this real quick. Double diagonals are weird because I think what happens is people trade them or people backtest them like they backtest calendars.
Guilty.
And so,
Guilty.
what's the slant? People are still naming my trade.
I like hybragonal. This is going to be the thumbnail for the show today. Hybragonal.
Hybragonal.
Was that what it was? I think. Yeah. Hybragonal.
I like the slanted towers, the legolateral spread, the fellowship of the slant. I like all of those.
The slanted towers that's not bad.
Yeah. So double diagonals, people backtest like DCs, and here's what happens when they backtest the DC, and then they backtest the double diagonal in the same way. The double calendar will almost always win in the backtest, right? And so then you think, well, why would I trade these things at all? I'm going to show you what I'm talking about this morning. We could talk about this. So I give you the old DC, the old DD.
The old DD.
DD.
The due diligence as it was on the
Now,
double diagonal.
Couple things about this. Let me first.
Hey, wait. This is pause. This is the old DD with changes.
This is the old DD updated since yesterday.
Okay.
You'll notice, or day before. You'll notice that we no longer are putting 100% of our money in this trade.
Yes.
We're doing
again, just for recap. No, when you are back testing, the higher your allocation, the more punishing the drawdown and potentially the spicier the CAGR. So back testing at 100% is useful for back testing drawdowns. There are other useful ways to allocate funds to back test, which is what we're doing right now at 10%. Wow,
Matt,
look at this hockey stick at the end, by the way. Oh my gosh.
Yeah. Matt, what else are we doing? What else are we doing in here?
I mean, here's the thing. This is a back test that has traded 600 times, which sounds like a lot. It's not a ton because it's been since 2017, but it's still like, so the point is there's going to be seasons when it doesn't go on because there's a min RSI and a min short long ratio. So we are looking at this diagonal, and it has those two things are really the entry limiters. It's floating the time entry, so it's coming in anytime in almost a 2-hour range, and then it's going to exit based on an early exit, a short long ratio violation, and a leg delta exit. So it's a lemon that you're trying to squeeze as much juice out of as possible to make the best lemonade.
You'll also notice that it's pretty much the exact same test as the 923 we did last week.
923 calendar?
Yes.
Or okay.
The double calendar last week. So almost, I think literally the only difference is that we diagonalized it.
Mm-hmm.
So this is what I was talking about. You'll look at this, sneeze.
What?
You'll back test this, and then you'll back test the double calendar. You say, well, double calendar does better. I'll just do double calendar. And so I wanted to give this as the day before Friday, because tomorrow, I think I'm not going to be available. Matt and Dan and maybe a special guest. Who knows?
We're going to soldier on.
We're going to soldier on and win the war. Win the war. I think tomorrow we're going to win the war. Because this is the thing, I'm going to give you guys hints, and I would love for you guys to just post all day in OO discussion channel and Discord about this, because I think you can improve this trade. I know you can improve this trade. But let me go ahead and give you the caveats of how to improve this trade. Dan, please give me the caveats now.
Oh, to improve the
trade? Just kidding. I put it all on Dan. I'm going to make this trade better. Hey, Dan, can you help me make this trade better?
Yeah, good.
I don't know what to do. This is the thing. You can't test these like it's not a double calendar. So let me just tell you a couple of reasons. You have some rails on that help, but the way these rails are not going to help. And so let me explain why. First off, the min RSI, that's great. That's fine. That's about the market. That's not about anything in particular.
Yeah, that's the weather. Dan called it the weather check. Put your finger in the air. Which way is the wind blowing? Like, do you want to do a double diagonal when the RSI is at 29 like it was in April? Maybe, maybe not.
Mm-hmm. Yeah, that's exactly right. So, secondly, the stop loss ratio of 0.1 and the entry filter of the min short long ratio.
You're saying short long ratio of 0.1. Okay. Yeah.
The min short long ratio of 0.45. let's think about that for a second.
Yeah.
And as always, I defer to Matt because Matt is the chief explainer at Option Omega, and that's why people understand things. Is I'm not explaining them. What's
False,
short long?
but continue.
What's the short long ratio?
The short long ratio is it's literally just the shorts divided by the longs. I mean, you can do it in Excel. You can do it on a calculator.
The shorts
You can do it on
premium.
your TI.
Are you saying the shorts extrinsic value?
Yeah, and it's the price of the shorts
Price of the short.
over the price of the longs equals decimal point. That's it.
So Matt, 0.45 min short long.
Yeah.
What kind of market, like shorts to longs, are we?
Listen, this is a great question, and I would want to back test a bunch of different short long ratios and try to find a sweet spot.
Because it's different than a DC. That's exactly right.
It's different than a DC, and the reason I can't just spit a number out is because I don't know. I have DCs that have min short long ratios, and each one of them is different. So obviously, the short long on a 1.3 is going to be different than the short long on a 1.4 or a 1.5 if you have any of those odd ducks.
Right.
Because they're all different. They're all different DTEs, which is like the main driver.
That's if you look at it and you say, okay, a double diagonal. Let's forget the double for a second. Let's just go single. You have a put, right? In a calendar, you have let's say it's today's expiration, a 0 day. Whatever the market, and say it's at 50 delta. Whatever you open up today, it's the premium of 0 day. Let's say, I don't even know what it's going to be. $1, $10, maybe it open. I don't know. $15, maybe it open. I don't know. Let's say it's $10, just for sake of numbers. Okay. Tomorrow's, and we're going to do a 0-1 calendar. Tomorrow's expiration is going to open up, and the price is going to be $20. Matt, what would the short long ratio be?
Say those numbers again.
Yeah. So 50, you open up today, you're doing a 0-1.
Okay.
The put is $10.
Okay.
The short put.
Yes.
Tomorrow's expiration, the long put is $20.
So it's just 10 divided by 20.
Yeah.
1/2.
And I was homeschooled, so I'm gonna need you to help me. Okay, 0.5.
Yes.
Right. Okay. So, let's say we went under that, whatever that number is. Again, I was homeschooled, but 0.45.
Okay. Correct.
Okay.
That's on.
Now, let's do this. Tomorrow, we're going to do the same thing, but now we're going to diagonalize it in the way we're diagonalizing.
Yeah.
Let's say today it opens at $10, the short, and tomorrow, 5 points underneath that, opens at 12. Right? Forget the solving the equation for a second. Just for the chat to think through this test and how you should test this. Should you expect the short long ratio to be bigger or smaller than that calendar?
So I'm sorry. Say the numbers again, Troy.
Okay. So again, this is great. I love this. This is
this is riveting.
I love saying things without any visuals. It's my favorite.
I don't have my notepad out. I can get it out.
Tomorrow, that's our calendar, right?
Yeah.
Today's the short is $10. Tomorrow the long's $20. Right. That's a 0.5 stop up.
Right.
Short long ratio. Okay. We're going to diagonalize it.
Yes.
Today's is $10.
Yes.
Because it's not at the money, it's not going to be $20 tomorrow. It might be $17, right?
Yeah. It
might be $16, something like that.
So the short long ratio is going to be higher because the long is going down. So 10/17 is 0.59. Yes, checking my math. Correct.
Yes. So that's exactly right. And I put Matt through the ringer because you don't want to see me try to do this live. Matt's smarter than me.
Well, we're actually coming out with a new YouTube series in the vein of Schoolhouse Rock. It's going to be OO House Rock, and we're just going to do short long ratios all day. So by the way, there's an excellent comment from the chat, and we have to come back to this. Please, by the end of the day, we got to come back to this comment from Rob H. I don't have the ability to put the chats on the screen today, but we got to come back to this. So Troy, 0.588, 0.59, short long ratio. They're different. Calendars and diagonals are going to have different sweet spots. Is that where you're going?
That's exactly right. You should have a higher short long ratio in double diagonals. That's why, side note, how can you know this works? Is that because the fact that this takes so many more trades than our double calendar version from 2017 is because you get a lot more instances where the min short long ratio is 0.45 because the short long. So here's your hint. Start with the short long and adjust from there. That's step one. Your short longs are going to be different than a calendar.
Yes.
Yeah.
Hey, I
So,
said that.
Matt
Your
said this
short
15 minutes ago, but I wanted to basically flashcard it.
Now you know why.
Without any flashcards.
That's a great, because you are buying less. You're buying less extrinsic value in your longs on the double diagonal than you are in the calendar.
Yes.
And that's, yeah. I mean, yeah. I mean, they're pretty. I mean, if you're trading apples and apples, right? If you're trading the same duration double calendar, like a 923 double calendar versus a 923 double diagonal, obviously the double diagonal is going to be more expensive, right? So the double calendar is a leaner, meaner fighting machine. For me, they act pretty, you know, in a way they're kind of, they respond, they're pretty stinking close.
They are.
The difference is, you know, that I just look at it. If you ask me two things, number one, double diagonal is a little more flexible in terms of doing them in a little bit higher volatility because you don't have the volatility risk per dollar as you do with double calendars. But two things. Number one, the double diagonals tend to, I just noticed in my experience, I can get out quicker with a DD than a DC. Number one. Number two, that's the plus of the DD. If I want to get out like on a Monday and there's a lot of news going on Thursday, Friday, I'll put a DD or a double diagonal on Monday, thinking I can get out if I wanted to shoot for a smaller profit, get out by Wednesday. But if I'm concerned about any kind of a price move, the DC can handle a price move better than the DD. So it's like, but they're very close. It is like a first cousin. I mean, it is.
Yeah.
It really is close. Because
in Tennessee they call that a kissing cousin, I think.
Yes, a kissing cousin, and I think it's, you know, the best thing would be, and maybe I'll do this in the next week just to do a little video on that. Is just put them, you know, whenever I'm thinking like, is this bad? This, yeah, obviously test it, but put them both on, right? Put a double calendar on, put a double diagonal, and you can see with the Greeks how they respond, right?
I think that's exactly right. And so
the deltas, when you say, Troy, because here we're using 28, 29 deltas. I mean, most people doing DCs, they're not thinking 28, 29, right, Matt? Wouldn't you say the majority of your DCs or Troys are not near 28, 29?
Right. Deltas? They're lower. They're typically lower deltas. I mean, here's the thing. It's all over the map. And as we get into low VIX, there are people that have, so I'll just say this, because of automation and backtesting, we have a world-class backtester. There are folks for years who have been setting up DCs and changing the deltas based on VIX range, which makes a lot of sense when you think about the thesis behind it. And so in general, I would agree with you that in the kind of VIX range that we have seen this year, folks are typically not doing those higher deltas. If they are, they're not carrying those to expiration. There might be people who trade them less mechanically or are, you know, trading them as vol plays, as scalps. But on this type of back test, yeah, I would generally agree with that. And there's a point that the chat has made, and great chat this morning. Shout out to all you guys about when we're talking about diagonals. This is what people would call a standard diagonal, which is a short diagonal, which is different than a long diagonal or an inside diagonal or an IDD. All abbreviations one might use.
Let me know puberty trade. I mean, like those are different.
Yeah, the Troy McNeil puberty trade is none of the above. But essentially, we're talking about three different things: a double calendar, a double diagonal, and a double inside diagonal. And then you have all these versions of it: the hybragonal, the puberty trade, which one side may be diagonalized, the other side may not. If this all sounds like Portuguese to you, that's fine. Because here's the deal. Dan is doing a series of videos right now on these setups because they are kissing cousins. And the first one is on YouTube. It's called The Doubles. The series is called The Doubles. The first one is on YouTube already. It's called it's the double calendar. There's another one coming. Double. The first one was a double calendar, I think.
No, I think it was a double diagonal, but I could be
double
wrong.
diagonal.
The first one was a double diagonal. The second one, and that's already out. You can watch it on the YouTube channel. Just go to our YouTube, which you're probably on right now. Just click over, look at videos. There's the second series video. The second one in that series will be out next weekend. So, and then there's going to be a total of probably 4. But if you're interested in understanding the relationships between how a calendar is a little bit different than a diagonal, is a little bit different than an inside diagonal or a long diagonal, the video is already linked. Just click on our YouTube channel, videos. You'll see Dan. It's beautiful. The doubles. So check it out.
Matt, can you put that video in?
I can't have chat. Actually, maybe I can, but
you don't chat? Oh,
I can put it in the comments for sure.
Okay. Let me finish real quick. Just before you guys all jump off and start backtesting this feverishly. Let me tell you 2 more things. So the first thing is, this is not a calendar. It is a kissing cousin. I'm going to let Matt do the thumbnail for the kissing cousin on that video.
I'm just going to go to Tennessee and take a picture anywhere.
Heyo, ouch, that hurt. So actually, this is a great example. Matt just made fun of my state. Me as a double calendar man, a double calendar handles those insults perfectly. A double diagonal is much more aggressive. So Matt, can you say that one more time and I'll respond as a double calendar?
I'm just going to go to Tennessee and take a picture anywhere.
Ouch.
Is that what you wanted me to say?
Ouch, that hurts. Now I'm going to respond as a double diagonal because it's a little more aggressive. Matt, go ahead.
I'm just going to go to Tennessee and take a picture anywhere.
I will end your life. I will end your, and that's when the other cousins pull you apart. The double calendar.
That's all you need to know, folks. That's the difference. What a visceral way to describe it, Troy.
So the first thing is the short long ratio is different when you're testing. So this will help. This is a fun day. We're all having fun. I'm naming trades, puberty trades. I'm about to give you alpha. I love saying that's my favorite thing.
Oh my goodness.
I'm about to give you alpha.
In a very non-financial advice way.
With all due respect. With all due respect, as a non-financial advisor, I'm about to drop alpha. So number 1, change your short long ratio. Number 2,
right.
Number 2, the deltas on the DC allow you to go past that, right?
Yeah.
And that's fine on the DC. We have found that test works well. You do not want your short double diagonal to go 10 to 15 points in the money.
What you're saying is the rails need to look different, Troy.
The rails, especially, the rails definitely.
Troy,
Yes.
Troy, can you drop the link to this back test so people can work on it for tomorrow?
I did already.
Oh, there you go. Already.
It's up there.
It is?
Yeah.
All right. It is 8:56, folks. Get in on this.
And just for the fun of it,
limited time only.
So Dan, I mean, deltas, again, it all depends on the day and the time and the setup and things like that. But any suggestions for deltas?
Yeah, I mean, that was my one question I had before you brought it up. You already hit it. Was exit using leg delta. Like, what do you have exit using leg deltas? I would just say I would at least test it definitely closer in than the DC. DC can handle more pain.
Yeah.
The double diagonal, I definitely would test it. I don't know, Troy, would you say like 5 points lower maybe on each side than you normally would at DC or more?
It depends. If you're doing testing the price, I would say 5 points lower. I would say if you're doing deltas, I would say just start at 50. Like, go from there. You know, move it up.
50 and then go up.
Yeah, like on touch, basically. Saying,
I
like,
got you.
hey, if the short goes to 50, if the short goes from 28 to 50, get out. Instead of 28 to 63.
And test it and see how that.
Yeah, like move them in a little bit is what.
And just a reminder in how computing works. And I don't mean that to sound as sarcastic and as intense.
About to drop some computer alpha on us. I like that.
But this back test is going to take a while to run because
this is step 4. You can tell them, but
because this is, you're using 8 years, you're checking the option chain over a floating time entry, and it's a multi DTE trade. So this is going to be a hoss. So don't expect this to run in 12 seconds. PSA over.
And when I say, so a couple things real quick with that, you don't have to go to 2017. That was just a carryover. I just copied the 923. Don't do just SPX dailies.
Yeah, actually you could adjust that save link if you want.
Well, people are smart. If you can take the back test, you can adjust
yes,
it. And but two, with that, this is just some back testing advice. If you're trading something like this, it's going to take a minute to test, or testing something that's going to take a minute to just turn off floating entry.
Yes. This is another. Yes.
Just try 10 o'clock. It's actually quicker with this type of trade to do it that way. Yes. There are some trades that you just have to let it go. There's too many factors involved. It could open literally any time of the day. With this, if you go back and look at it, most of them open at 9:35.
Yes.
So just do 9:35. It's fine.
Yes.
And also, Troy, maybe if they could test with, because this is if you hit the trade log, this is double diagonals are going to be 30% more expensive than a DC. Yeah. And this is 14 wide. I'd love to see a version that you could go 5 or 7 wide, much cheaper for to trade.
Yes.
If it would test well.
Yes. Yeah. So trade. We said this at the beginning of the week, but we stand by it. You can do whatever you want to this trade as long as it's diagonalized. Yeah. That's the only gotcha. As long as
it's still 920. No, we're saying anything at all. You can change it to a 1-2.
You can do a 1-2. I don't care.
Yeah.
I don't care at all. The whole premise is diagonalized. So as long as it's diagonal, this is not like the previous weeks where it's like we give you a trade and like we've got the base, but now you can adjust some things and see what happens. Add some rails. Stuff like that. I'm saying just give me a good diagonal. I just want you guys learning to test diagonals. That's
it might be good to go check SPY, right? Because if you want to do it cheaper, you could do this in SPY, right?
SPY. I would just, if you're going to do it in SPY, just always be aware of the exit times.
That's
because as people are learning, brokers don't love it when you hold in the money options that you don't have enough account position on to cover late in the day. So just beware of that. If you have to hold it until 340, and if a 158 exit absolutely slaughters the capture rate or whatever, just be aware of that.
Yeah.
So hey, Rob literally had a great comment. I just want to talk about it real quick. I don't know if you can put it on the screen. 9 o'clock and 30 seconds. He said, I fear that if I test with more than one contract per trade, I get bias. It is not wrong. And we probably need to do like a whole, we could probably do like an MMA style bracket where we have different people on to argue the merits of backtesting with different allocations. And we could do a whole week in the theme of the Hulkster and invite guests, because here's the thing. You're correct, Rob. People want to know what the best way is to backtest in terms of funds and allocations. The reality is there are pros and cons to each way that you're doing it. And the way that we talk about it most frequently, and the way that I talked about on the show, is bigger allocations will show your drawdowns. And that is correct. It will be, there is a recency bias with that. There just is. So There is. So the cool thing is we have a world-class backtester, and a lot of folks will do backtests at 3 to 4. If you're here for financial advice, this is not the show for you. There's plenty of CFPs that have shows. Troy threw that up there just to distract me from this yappuccino, which means wrap it up. I'll say this. There's a lot of people who use a world-class backtester, and they backtest maybe 3 to 4 different ways. Number one, they backtest full port to see if the trade even survives, which for some trades that go to zero is not possible. Number two, they backtest at a reasonable allocation, which is more than they trade from. But again, they still want to get the sense of drawdown. And number three, they will also backtest it at one contract as a cap, and that to see a more maybe perhaps long-term perspective if they're not trying to chase a trend, if they're running a longer backtest. So great question, Rob.
Great question. Let me end with this.
Hit it, Troy.
I'm going to tell you about one of my dirty little pleasures that I like.
He was homeschooled, folks. We don't.
Dirty.
Is guilty, not dirty. Sorry, guilty pleasures. Yeah, I was wondering why that felt so wrong to say.
This was about to be edited.
One of my guilty pleasures is during the fall, especially. It's football season. Tennessee, for those who don't know, we have a giant idol factory downtown that seats about 100,000. Anyway, that's another conversation.
Great way to say it.
But we're driving around. It's crisp weather. It feels beautiful right now. It's 50 in Knoxville, Tennessee. It's 57 degrees. I will take that all day long. We drive around on Saturday. I like listening to live radio sometimes, and I'll listen to the news. My kids want to kill me for this. I'll listen to news, like the news channel, whatever the local news channel is. On Saturday, they have sponsored content, like a radio show that's like basically a paid radio show, paid advertising. But what it is a bunch of financial advisors.
Oh yeah, Saturday mornings.
Yeah. Yeah.
And here's my guilty pleasure. I actually love listening to them, not for financial advice, but the way they present things are so hilarious to me, because they're smart, because this is what they do. They'll say, hey, coming up, is the firing of the Fed going to be a big deal? Is the market about to tank? So you're like, okay, they might actually talk some markets a little bit. They come back, they say, listen, it's about the longevity of things.
Oh my gosh. The hook. They're casting the hook. They're trying to get the hook in.
You want someone who understands the nuance and can understand these things for you, to where you don't have to worry about it.
That's very persuasive. They're turning clickbait into an ad. That's what clickbait is.
I love it. So
taking your worries, and we'll take care of your worries.
That's right.
And this, again, I don't want to make fun of financial advisors, except for I do. What I love about that so much is when they're like, you want someone who understands the nuance. And I will give financial advisors credit for this. They understand tax structures really well.
Hopefully.
A good one understands tax structure. But as far as investing, as far as the market itself, as far as market knowledge,
they're not generally trading options.
When they say you want someone to understand nuance to navigate these times, what they mean is you want someone to buy their version of SPY with the 3% rate and just keep your money in SPY no matter what happens. That's what they mean by that, which is hilarious.
Right. That's right.
So anyway, shout out financial advisors. You guys, one of the funniest games in town. They really are just like a bomb and any time. I have some financial advisor friends, and when the market's like doing weird stuff, Liberation Day, I'm like, how's it going? And they'll be like, well, I just answered emails all day and took phone calls and explained everything's going to be okay. You should just stay put. That's all they do. Like,
everything's going to be okay.
Yeah, I love it. It's just so funny to me.
Can you lend me your crystal ball that you know everything's going to be okay?
Yeah. And then there's a guy who doesn't know anything about options, a friend of mine who's a financial advisor. I'm not going to tell their name because that'd be embarrassing to them. So he was like, how are you guys doing? And I was like, well, I did some reverse calendars. And I just like jump into it. And he's like, okay. Yeah, I got you. Anyway.
Good for you. Yeah.
Good for you. So
hey, futures up 6 3/4. That little dipple got totally digested. VIX is about 14, 15 right now.
Nvidia is basically unchanged.
Nvidia unch.
In these trying times, you want 3 guys that are going to provide nuance for you. and we'll be back tomorrow to provide that nuance for you. So,
Mm.
guys, listen, have a great trading day. And hey, put those tests in there. I want to show some stuff off tomorrow for Friday. So send them.
We've got the links are we'll drop the links in the Discord too.
Yep,
So
for sure.
Yeah.
All right, guys, have a great